Hello everyone, this is Riya Singh, the Senior Research Analyst for Currency at Nirmal. So let's look at what has happened into the Forex market so far. We have seen quite a volatile session and dip of dollar index as well. Dollar index has fallen at around 4% from the highs and has settled at around 107, 106 levels within this ranges. Now, if you look at the recent numbers, whether it's inflation numbers or the employment numbers, both of these factors have cooled off. Inflation have cooled off in the US from the highs, and this is fueling the sentiment that Fed may go softer on its rate hike in December. However, there have been quite warnings back and forth from the FOMC members that it is still too early to say whether they'll be going forward with a pause. They are still not considering a pause, but I think, of course, the quantum or of the rate hikes will slow down. If you look at the UK, the inflation numbers was released today and it came at around 11.1%. This has come against the expectation of 10.8% and what Bank of England was predicting at 10.9%. So obviously it has accelerated. Now, one point that we can take away from the current inflation print of the UK is that it might peak out right now, and it will also push Bank of England to go for another aggressive rate hikes. Now, if you look at the inflation numbers, why we are saying it will peak out, because there have been quite measures that have been put forth by the government, such as pricing the energy utility bills and expenses. So if you look at the major contribution into the acceleration of the UK have been the energy bills and the food. So the cap on the energy bills will help the inflation to cool off, because it will not contribute to another acceleration in the expenses on that part. So for the UK front, inflation might have peaked out. Bank of England may go for an aggressive rate hike of around 50 bips to 75 bips in the December policy meet. Talking about the Indian rupee, now Indian rupee did see it testing at lower levels or the appreciation levels quite recently, but it has rebounded again towards 81.50 levels. Now, if you look at the data, the trade deficit has come at a 2-month high. Exports have dipped 17%, while there is an acceleration into the imports. All this is indicating that the external factors still remains quite risky for the overall Indian economy, and we will see Indian rupee anywhere between 82 to 80.80 levels on a medium term, but on a shorter term we are projecting it in the range of 81.95, 80 levels. We are not seeing much dip towards 79 or so forth, because I think once it reaches 80.50, 80.30, 80.20 levels, these ranges, it will be an opportunity for the RBI, and it will rather come into the market and go for a dollar buy and build up the reserves, which it has spent aggressively in order to defend any extreme volatility into the Indian rupee. So this will give the RBI an opportunity to build up the reserves. Thus, we are not predicting a very sharp decline into the USD INR. Thus, what strategy that you can form in the rupee is playing within the ranges that has been stated. We could see it in few sessions testing the high of 81.68, 81.95, and from that it could be an opportunity to go short rather than again going long towards further levels. So the resistance that you can see into the Indian rupee is 81.68, 81.95 and 82.17, whereas 81 and 80.80 will remain as a support zone for the Indian rupee in the coming sessions. That's all on the currency front. Thank you for joining in.